when would be best to buy Chinese or international stocks?
This came up to me this weekend. I want to be very clear. So not until our soft war with China is over and this rate cycle is lifted. So like once the Fed stops raising rates, that's when I'll look. And China has its own set of issues, but if I look at Alibaba, which we can argue is as great or better than Amazon, should be a lot higher. They topped out in 2020 at 319. They're currently at $88. It's unbelievable that company is that low. Even though I like Tesla a lot more, even if we look at NIO went from a high of $66.95. It's currently at $10.09. Prices should not be there. But Chinese stocks are not safe until we get out of the war with them. Once they make a declaration that they are not going to try to overtake Taiwan, semiconductor, and the province of Taiwan, and once rates begin to be lower as well. So I know people want international exposure, but even if we look at Intel's potential acquisition of the Israeli semiconductor company got blocked by China. There's a lot of war games where just like, man, the block is hot. Like, I don't know how to put it any way clearer than that. Like, it's not safe to do business in China. And also, as our president is saying, hey, we're going to levy sanctions against American companies if you're looking to invest there. Even though I like some of the stocks that are in China, they will be suppressed until some of these issues go away. Like, the macro issues are more important than the technicals. That's why every presentation, I'm telling you, technicals are just representation of the fundamentals on a chart. If you don't have a clear picture of what's happening in the macro picture, your account will be devastated and destroyed. So you have to wait for a little bit.
That's for Chinese stocks?
Yep.
I've learned my lesson with investing in Chinese stocks. I haven't had the best experience. It's something that I'm not great at. So I was aware of it and said that it's not something I'm going to continue to do. I believe a wise man named Ian Dunlap once told me that we have some great American companies.
Yep.
Stick to what you know. And I took those words very literally. So thank you.
I mean, they reported that their model right now, which took a lot of people from poverty to having a middle class to a very wealthy ultra class, is now in danger. So if they went on a 40-year run, but now as a result, and we've said this before, Rashad, you brought this up, Troy, you brought this up, war is not good for anybody. Even in rap, all the little diss records and beef records, people end up dying and friends getting hurt. They don't, no one has really went diamond off of a diss record. It's really there's more of a risk than anything. So if we have issues with the commercial real estate market in China, if COVID was created or was dispersed from there, they have a whole bunch of other political issues that we're going through. When Jack Ma spoke out, they took their equivalent of Steve Jobs and made him go sit on the bench for months. And he really hasn't said anything since then. What do you think they would do to the 57th best stock in China, let alone the people? That's not an environment in which you want to. And America has its own host of issues, but it is Hunger Games over there right now. Steer clear. You can do what you want, but steer clear.
Season 3.
No Jennifer Lawrence.
For real.
Okay. So what are some ways I can increase my probability of winning as a trader?
I've been thinking about this a lot going into the presentation with Kathy and Mike. Number one, at some point, every trader needs to learn how to trade the market without using any indicators. So if you can just trade off price action alone, it's kind of like in ball. Everyone has their go-to moves, but it's can I put you on any court in America and you'll be able to score no matter who you're playing against? That's what the equivalent of just trade off price action is. Because all you really have is highs, lows, and what the median or an average is. And number two, I say this all the time, but the number one thing that I see in traders that do not consistently win and do not make a lot of money is that they overtrade and they do not stick to the number of trades it's supposed to for a year. So you have to factor in stop hunting from your brokers, stop hunting from competitors, Algorithmic trading, there's decay in your actual trading strategy. So whether you trade in moving averages or you trade in edges or order flow, at some point, all strategies have decay. But I don't meet many people who year over year, they're like, hey, I took 14 trades for the year, I'm done. There's one say, hey, I took my number of trades. I know I could do more, but I'm not. I'm just going to stay here and enjoy the 80% that I'm up for the year or the 150% that I'm up for the year. One and more usually leads to disaster in trading. So those two things, like being able to trade off price action alone on any chart in any market off of any time frame, and then your willingness to stick to your plan. If people can do that, they'll make more money. Everyone that I know that loses a lot of money or they're not where they want to be, you're trading too much. Like trading too much is like cheating and getting caught and being filmed and then playing it on YouTube and be like, baby, why are you taking the house and the kids in the car? What do you expect?
Well,
you can read all the books that you want to. I got a couple recommendations. Number one, stillness is key, right? Number two, Family Fortunes. I've mentioned this before by Bill Bonner. You need to go through Michael Lewis's The Big Short. Even in Kathy. I love Kathy. I think she's been incredibly innovative. But one of her biggest mistakes is rotation of stocks and getting in or out of them too early. Kathy bought NVIDIA when it was $5. Kathy did not hold through the run of last month, however. I know there's reasons to, but portfolio allocation, asset, I get all that. But it would help a lot if you held a stock from 5 to 500. It will help. Overtrading usually leads to disaster. And I don't know how to get that through more people's heads, but if you want to make money and win more consistently, that is the blueprint. If I've made you money, please put yes in chat.
Got you. That second rule that you said, the overtrading part, a lot of people get this confused, right? Is it overtrading the same stocks? Or like how should somebody approach that? Right, because if rule 1 is applied and I can trade without looking at technicals and fundamentals, I can just trade off volume, then I have to know right? Like I need to know my company, but that's tough, right? If I'm trying to know I know my company, how many companies should I know? Is it like 5 or is it 10? Right? I'm not going to be able to know 50 companies at the back of my hand. So am I studying like maybe 10 companies and being able to trade those? Or am I finding different trades throughout, right? So even if I limit it to 20 trades throughout the year, am I doing it inside the same equity?
Absolutely. I would say study a maximum of 8 companies. If you're able to produce 300% return or more, if you're producing less than that, I would study 2. Anyone that tells you that they study 40 stocks and they can trade all of them well, they're lying. Even from the beginning, if we go back to episode 70, Classic should have won triple, 2 tech, 2 index, Apple, Microsoft, ES, and bonds. When you study something in and out, there's a reason that we don't have like a BMX or surfing show. We're not efficient at surfing. Adam 22 can go from biking to hip hop and talking about King Von. We can't do that. You have to know one specific area so well that you know what it's going to do before it even happens. Like when you really have your trades down and you study 2 to 8 companies really well, you'll almost see the move before it even happens. If you don't, you're going to be in danger. And I think most people, once again, if you're making less than 300% return, you should probably only do 20 trades max per year, but really 12. And stop there. Once people get past that threshold, that's when danger happens. Oh, I just traded because I had a loss, so I want to make up for it. Now I broke even. Now I put a straddle on, and then I want to do futures and then options. Then you have to shoot the shots that you know you can win. And that's what separates the great traders and investors from those who are not. And even the people we met, everyone that we've met that are institutional traders or investors, they're not the most intelligent people that's ever walked earth. The discipline for their crafts is what really set them apart from the other 3,000 or 4,000 people that really wanted the job.